Good afternoon, everyone.
Good morning.
Oh, good morning. All right. Let's just wait slightly for others to join us.
Yeah. How you doing?
I'm all right. Okay. Just there.
Okay, that's good.
What about you?
And how is trading too?
Yeah, it's going good. Thank God.
Yeah.
Hope you are seeing the patterns better now.
I told you, I need goggles to see it more.
It's just practice and time. That's all.
Yeah, I think it needs a lot of practicing.
Mm-hmm.
Yeah, like the one I was asking you. When you said it was a different thing, I was like, God, why can't I just see this thing?
No, now the fact that you can even spot something in the first place, it matters. So I will give you one indicator. I'll give you guys one indicator today. That indicator will
Okay.
help you in your initial stage. It won't really paint what's actually happening. It won't really paint it like that. But it's just lines. So you'll be able to see what the market is actually doing. You'll be able to see it. So
Then there's another thing. If you see a pattern in say 15-minute time frame, then in a 1 hour time frame, it's totally gonna be different, right?
but it depends. Sometimes when you see a pattern on a smaller time frame, if you go to the bigger time frame, the pattern will still be valid. It's just that the candles now will just be fewer. You understand? So we'll go through one or two scenarios. And sometimes when you see a pattern on the bigger time frame and you go to the smaller time frame, you just realize that the candles will be more. There will be more candles. There will be more candles. Imagine.
Okay.
Imagine.
I really need that lecture on pattern.
Don't worry. You will understand everything real soon.
Okay.
Where's every other person? No? What? Are you kidding? How many are we now? Because this class is going to be really brief. Okay. Nobody still joined. Captain Affair and
We are just 4.
yes, and B.
Yeah. Are you sure they are not on not at work?
Let me just see. If you don't join now, the class will be recorded. Okay, anyway guys, let's just get started. Let's get started. Let's go ahead and share my screen. All right, can you guys see my screen now?
Yes.
All right, good. So basically, what we'll be discussing today are the most common neutral chart patterns, which we'll be starting with. Majorly, there are 4 of them, but there is one particular triangle that I, for one, I don't really like and I don't trade, and that is the symmetrical expanding triangle. For some reasons, I don't just like it. It doesn't just work for me for some reasons, which I still don't understand. So, or maybe because of the way I've conditioned my mind not to like it. So we'll be talking about the symmetrical triangle, ascending triangle, and descending triangle. These 3 triangles are neutral patterns, meaning they can either be a reversal pattern or a continuation pattern. As you can see right here, you can see this ascending triangle. This is the upper border, this is the lower border. You can see price can break up from this rally up and break out and keep going, or this momentum down, it can keep going down. So, and vice versa with descending triangle, you can see it can go up and can actually crash down. So the next thing is symmetrical triangle. You can see the symmetrical triangle can also go up or go down. But what's the difference in these 3 triangles? As the name implies, ascending, you can see this trend line that is showing us this is an uptrend is actually ascending, while the upper border of the pattern is just a plain resistance, a very sharp resistance, not slopey, not steepy, straight, sharp, and accurate. These can actually happen sometimes when you are anticipating a triple top. Then the third top fails to come down and it actually creates a new higher low instead of a lower low before breaking out. So this is an ascending triangle, which inversely can still break down. So opposite is the case for descending triangle. Let's say you are forecasting a triple bottom. You know, in a triple bottom, the second high right here will not be as high as the previous high. So, but the same lows. Then coming to form a new low, you are expecting a new higher high, but it failed to create an higher high. It created a lower high. You might not be able to break the previous high right now. So you want to wait for price to get to this point. At this point, when you see price break out, then that means your descent triangle wants to go down. And if your descent triangle tries to test the upper, what's it called, diagonal resistance, which is the trend, it can break up and keep buying. So, and symmetrical triangle, you can see it has most of the time, the upper trend line and the lower trend line. The lower trend line will establish the trend, and the upper line, that one will establish a diagonal resistance. Apart from horizontal support and resistance, we can have support and resistance diagonally, which most of the time also means trend. So you can see trend creating higher highs and higher highs and lower lows. Higher highs and lower lows. Like it's trying to close in on the triangle. It's filling up all the space symmetrically. If you put in a straight line between this triangle now, you will see that you can literally cut this triangle into the same 2 equal halves. All right, so that's said and done. let's start with the symmetrical triangle. Let's go to the chart. I could have actually drawn the charts, gone back in time to look for an example and all, but that is not a practical approach. So we'll just damn. I'm in this trade, this bearish flag, and for some reasons, Euro News came out and it actually run me into stop loss, and now it's pulling back. I went to enter an opposite trade, which is Euro JPY buy, and that one too is now taking me. You can see it actually tested. It came out completely finished as a solid candle, then started testing. So I think I'll just close every trade for now. I'll just let it be and I'll relax my mind. That is the ideal thing to do when things are not really going smooth the way you want it. Every day will not be smooth in forex trading. You have to know that every day will not be smooth. There will be some very, very, very awkward days. And today is one of those days for me. Anyway, so as we are saying, we are looking for a symmetrical triangle. So let's just go. Hold on just a second. Just reference to the XPS 500 I sent earlier yesterday and the update today. You can see we have the tick up. The undo, as expected, actually formed this way, then went back up to retest, and gave us this. So now, if you observe this properly, apart from having a tick up and undo here, we have confluence of pattern. I'm still going back to symmetrical triangle, but just so you understand as we go. We have confluence is very important. Sometimes you have confluence of trend and confluence of support and resistance, like this now. At this point, trend line is actually confluencing with support. So this region is a very key area. So look at this now. We have an inverted cup and handle. Then we have, what's this? An ascending triangle. Ascending triangle coming from this way, boom, boom, boom. It has broken down, but it's testing this point. So right now, I will not just conclude. I want it to actually come down, retest, and I'll go for a sell. So that is that. What other trade am I looking at right now? My USD card, you can see this. This now, I was expecting a triple bottom, 1, 2, 3, but it came back up. It didn't break out. Let's say I just jump in a buy because I was seeing triple bottom. Right now, I will be regretting it. So immediately I reevaluated. Let me go to, Zoom is always making everything drag. So immediately I just reevaluated. Then I realized this can be a bearish flag. Coming from here, this is the flag, then another pole. So I'm just waiting for a retest, hopefully. And if it doesn't retest, oh well and good. Let it go. So let's go back to what we're actually doing. We're looking for a symmetrical triangle. JPY. Good. See, just look at this. Look at news. Took me out and it's coming back down. This is so painful. Anyway, no problem.
Yeah, today actually looks very abnormal with trade.
Everything has been, you can see this ascending triangle too. It broke out and it has actually profit. Let me just look for a symmetrical triangle. GBP, JPY. These two, it came down, it tested my entry price and took me out. Now it's back going my direction. So there are just days like that trading will just be annoying. So just don't force it. Yes, better days are coming. Thanks, Nicola. So don't force it. You just let it slide. This GBP NZD2, I saw the breakout. I was waiting for a retest, but because my mindset is already, I'm not really feeling the market anymore. I just have to let that one go. Maybe we just go back in time to look for a symmetrical triangle or change our time frame. This is a flag. Okay. Yeah, this is not really perfect, but symmetry. You know, price won't have formed at this point anyway, so that's not a very good example. I don't want you to force anything. If it's not a pattern, it's not a pattern. And as I said earlier, do not draw through the weeks, so you don't fake yourself into a trade prematurely. So that is that. So I hear you.
To be.
All right, guys, a call came in. Thanks for your patience. So yeah, so this is a perfect symmetrical triangle. But as it stands, I need you to understand something. Before you can actually establish symmetrical triangle, I actually made a mistake, but because you are just backtesting, it's not as if you want to dictate what pattern the market is trying to paint at the moment. You have to establish your support and resistance. You can see resistance turned support. It was tested at this point and it was turned support. Then again, at this point, we have the highest point, which is the most recent resistance. So we have one right here. So all right. So in a symmetrical triangle, what are the main attributes we are looking for? When you are trading a triangle, it must have at least 4 touches on your lines, on your trend lines. It must have at least 4 touches, at least 4. And as you can see right here, coming from down from the support in a new uptrend, you can see we hit this point as point 1, which you can actually label here too as point 1, where it's actually touching. It doesn't still matter. So let's go. We have 1, we have 2, we have 3, we have 4. Most of the time, the breakout occurs at the point 5, but that doesn't mean or doesn't say it can actually do this. Come down, create a 0.6, then break out, retest, and keep going. Do not eliminate that possibility. Do not. So always, that is why you don't just conclude. You don't conclude for the market. You let it do whatever it wants to do. So now, guys, let's say we've seen this now, and we're expecting a breakout. What is the next thing you need to do? You've actually drawn your pattern and you're expecting a breakout. Okay, I said I wanted to show you something. Just a second. Come in. So as I was saying, after you draw the support and resistance, the obvious support and resistance, you can actually put another level here. I don't know if you can see what I'm saying, but that's not the. So there's this indicator, zigzag high low 4. When you show it, it will actually give you all the lines, what the market is doing line by line. Let me delete this. So you can see the green and yellow lines. Yellow is for rally up, green is for rally down. So you can see right now it's actually breaking it down. Here we have double top. It will help you dictate on time what the market is actually doing. You can see a double top here. So if you spotted this early, you could have waited there for a retest, then come all the way down here. You have calculated your TP, taking profit somewhere here, and you can keep riding with stop loss at entry. So that is that. That is this indicator. The name is zigzag high low 4. There are so many zigzag, but this one is literally the best. Or you can keep trying till you get the one that you like most. So what I do more initially, because I told you I will show you all these indicators and how they can help you. I don't use them, and they're not the reason what I base my trade on. I don't have them here. It's because I'm preparing for the class. I had to just go and bring them all back out. So because I would rather use my eyes. If I can't use my eyes to dictate what I want to trade, then I don't know what I'm doing then. So we have 5 waves. So I believe now you know. Then let me take my triangle too. If I didn't want to use trend line and all, I could have done this easily just to spot the triangle. Then D. By default, it will align all the oh sorry. So you can actually adjust it by holding any of the points. By holding any of the points.
So what tool did you use? Sorry, I think I missed that.
What did you say?
The tool you used just now, I saw
the triangle tool. The triangle tool.
Thank you.
All right, you're welcome. So you can see I have established we have a triangle. This alone is enough. Very clean chart. I've established we have a triangle, which has made the first touch, second touch, third touch, fourth touch. Then first, second, third, fourth. Then the fifth. Now we are expecting a breakout or a retest to come back here. So let's go. Let's now play and see what happens. It's rejecting that area. It's still rejecting. You can see multiple candles. You can see it's weakening. Look at this week now. This we actually, before the candle closed, someone might have gone for a buy already. Do not do that. When you see a candle break out of a pattern, you have to make sure it's a very strong breakout with the body of the candle outside the pattern, not the wick outside the pattern. So that is that. You can see wick. Then you can see a candle has actually closed. And looking at this formation, this is a morning star formation. Morning star formation, and we are expecting a buy. Yes, we are the resistance, but we are expecting a buy. We have a strong morning star formation, which shouldn't count. It should be at the support, but we were expecting a buy and a breakout. So now we have a solid candle, a candle with the full body closing out of the So you can see it's closing out. So now we are expecting to actually go for a buy. What you can do is from this point, after the candle closed, you can just go for a buy, or you wait for it to go up, retest, then you go back in for the buy. But let's see this. Where's my ruler? Now for you to know your take profit, the stop loss is not hard. The take profit is the main thing. So from the first touch on the triangle to the second touch, 0.1 to 2, this is 140 pips. Let's just say 140 pips. 140 pips. Okay, good. Now we have 140 pips. Excuse me, guys. 140 pips. So from the breakouts, we are expecting profit target of 140 pips. 140 pips. Okay, good. Now you put an horizontal line there. Now let's go to another time frame. Let's see if you have price action in that area and what exactly has it done. You can say at this point we have some resistance, we have support, resistance. So that region, it doesn't really have to be on this line. Anytime, I told you always think of support and resistance as the zone. So this is the zone. This is the zone. So nonetheless, we know we are close to a very key level. So let's go back to our setup. Yes, and sometimes one more thing, when you're actually waiting for a breakout, if your pattern is spotted on the 2 hours time frame, you want to go to, you can see on the 2 hours time frame, very neat, few candles. You can see it has closed out, but you can go to a lower time frame to see what the candles are doing early enough. Look at this. It has closed since outside. It has closed since. Look at this place that tested that week. It was an evening star. It took price from this point, it brought it down, gave us a morning star to go back up again. So you'll be able to detect what is happening early on a smaller time frame. If you are trading on the 2 hours time frame, go to the 30 minutes time frame to see what's happening early. If you're on the 1 hour time frame trading, go to the 15 minutes time frame to see what's happening early. If you are trading on the 30 minutes time frame, go to the 5 minutes time frame to see what's happening early. So that is that. Yeah, so we can see a clear breakout, and this point has been tested on the smaller time frame with candles, wicks, and everything rejecting. See, then at this point we can just go back to our 2 hours time frame, then setting our position. We are expecting 40 pips, 140 pips target. How did we arrive at our target? The length of 0.1 from this place, 1, 2, from 1 to 2 is our expected profit. So now the next thing to do is take out your long position. When you are buying, it's called long. When you are selling, it's called short. So your stop loss will be below the previous low. Below the previous low. So this gives us a risk to reward ratio of 1 to 4, which is not really bad. But trust me, in this kind of scenario, you should expect price to actually still be at least 1 to 5. Risk to reward of 1 to 5 is good. So let's do that. So that is where we are expecting price to get to. That is where we are expecting price to get to. So it might retest, it might do this, might do that, but that is where we are projecting. Don't forget, forex is not a game of prediction. It's a game of probabilities. What is probable? What can happen? If I do this, what will happen? If the market does this, what will I do next? So probabilities, you create all these probabilities for yourself. So how do I now create TP1, TP2, TP3 just to help myself? Yeah, I understanding the principle of Elliott wave alone is enough for me to calculate my TP1, 2, and 3. But for a layman or for normal person or for people who still don't understand the Elliott wave yet or are not using it yet. So this is it. You use the Fibonacci tool. I believe everybody on this call knows what the Fibonacci tool is. If you don't know what the Fibonacci tool is, after this class, go on YouTube, just put in how to use the Fibonacci retracement tool. So now we are supposed to expect a retracement around 38.2% retracement. Then the second one around 61.8% retracement, and the third around 100% retracement. So what do I do?
So where did you start your point? From what point to what point?
Whenever you're trying to calculate retracement, oh, just a second, guys, that's an alert. Here's the card. Did I close my USD card? No. You can see one of the many importance of alerts. What pair were we on? What pair were we on, please? Hey. Okay. Thanks. All right. I've seen it. Thank you. Zoom. Whenever we're on call, my computer is always hanging. And likewise, everyone, they need to work on that. Oh, what's this? Okay, so as I was saying, whenever you want to calculate retracement with the Fibonacci retracement tool, you start from where you are actually going. So where are we going? This top, our TP. That's where you start from. When you want to calculate profit, you start from where you are going to, then to your entry, then you bring it to your entry. So your entry will be 0.0, where you are going to will be 0.1, which is 100. So now the first TP is supposed to be at 38.2% retracement. But because you know nothing is 100% accurate, so you have to give room for margin error, broker spread, this, that. So just look at that place. Can you see any significant high or low? See, we have a point here. So I'll just put it here at the previous high. So because I know price action, let me just check this on my phone. Because I know price action will probably test this resistance before breaking. Okay. All right. So we know price action will test that point, or it should test that point. Let me draw your resistance there. See, you don't have to rush. When you wake up in the morning, you go through the charts. And one thing I do is I delete whatever I have drawn yesterday. I will delete it. I will start drawing afresh. So select the pairs you want to trade. When you wake up, please, I will come back. I have a brief. It's fine. It's recorded. So when you wake up, you just go into the chart. You draw your support. You draw your resistance before you start anything. You draw your highs. You draw your lows. You put in your trend lines if you cannot spot the pattern on time. Those are the things that will help you spot pattern early. So, and yes, I think before we had the resistance, I don't know why it wiped off. So you can see now that everything is falling in place. All these levels are very important. If you understand that to know the future, just look at your back. So that is what forex is all about. So now, to know what is going to happen around this place, let's look at the back. We have a region, we have an area here. So now our TP1 is there. Then our TP2 should be at 61.8% retracement. But just because we need to give it some room, let's put it here, just a few pips away. Then later on, see our TP3, but we have a key level here. So let's just put it a little bit below it. So from this point henceforth, we can just leave the trade or leave the smallest lot size that we have in the trade. All right, let's play this trade back. And guys, you have to know that past results doesn't guarantee future results. Please always back test, always make sure you are confident in the trade you are taking before you even go in, please. All right, let's go. No technique is absolute. So it's playing now, you can see. Closed. You can see price is really finding it hard to break that. You can see it's testing with the weak, but automatically you'll have actually hit TP1. See, can you see? Candles, wicks. This candle failed to touch. It's trying to, it could have easily broken this point, but because there's a resistance there, it is not going to just break it in one or two candles. So you can see wicks playing around this region, though TP1 has actually hit. So that's how many pips if this was a legit setup. That's 35 pips. 1.0 lot size, standard lot size, that's $350. So let's just keep going. $350 in the bag. So let's keep going. You see, it's rejecting that area, really rejecting it. Really, you can see, broken out. Can you see the funny thing about the foreign exchange markets? If you are patiently wait for this trade, see, TP1 hits, TP2 hits, then it didn't even hit TP2 easily. Then the next candle went in, actually hits TP2 and 3. Then see where it is at the top of where we are expecting price to close, right? You can see the wick touch that place. Do you notice the wick at that point? It might not actually get there. It might get to this point and come back. It might go a little bit higher and come back. But one thing is, after some time, you will have been able to get to a point where when you draw your long position and your short position, the difference between the candle and your position will just be slightly, maybe a little bit away from it or a little bit out of it. So let's just keep going. You can see serious drop after the conclusion. Serious drop. You can see liquidity. See how many pips is from our entry to TP3. We've secured 115 pips. So you can see price is dropping. Price is really dropping drastically. Price is really dropping drastically. I just wanted to conclude something, then I'll show you something. The funny thing about the foreign exchange market is everything is a repeated circle. Everything is a repeated circle. Look at this now. We finish this trade here. We see price drop. We see do whatnot. We've concluded our trade. Let us now look at the market. Let's assume that we are in its real time. Then what do you see? What do you guys see? What do you guys see? What's this? What do you see? What do you see? What do you see? I see another triangle. So Look at this zigzag. Can you see what I told you about this zigzag? See, rally up, down, up. But because price is still indecisive, it has not actually drawn the nest. But seeing this alone, you've seen what the market is doing. So keep that at the back of your mind. Zigzag high low fall will help you, just help you detect highs and lows. So all right, so guys, we don't know what's going to happen next because we don't even have an idea right now. Because I don't have an idea. I don't know if you actually have the picture in your head of what the market did at this point. But I don't think any of us know what the market is going to do. So let's reduce the speed now. Let's go. Then let's wait for what's going to actually do. 0.1, 0.2, 0.3, 0.4. Let's see if it will create a 0.5 and break out, or a 0.6 and come down. So let's go. At this point, we are in a 2 hours time frame. Then we can see the size of the triangle is not really big. Let's just go to the 30 minutes time frame. You can see we have a solid breakout. But because we have too many candles, I would rather just go to 1 hour. You can see it has tested that point with week before. So we are on a 2 hours time frame trading, but let's see what's happening on the 1 hour. Because you have to be able to go through multiple time frames to dictate what the market is doing. Now see, we have a candle closed outside the triangle. We have another candle. So ideally, how do we take our profits? As I said earlier, from 0.1 of the top of the triangle to 0.2, we have 120 pips. That is why only one currency per self is enough for you if you can actually master one particular strategy and you know this is working for you, then you just stick to it. 120 pips. So let's do 115, give or take. So let's go to a bigger time frame. Do you have anything happening here? Nothing too serious, but still the same. Okay, maybe because the way I'm expanding this is not making us see. Still the same region. You can see resistance tested so many times, support tested so many times, resistance failed to break them, broke it. This place you can see it being tested multiple times. So let's go back to our 2 hours. We will soon be done. In 3 minutes, we should be done with symmetrical triangle. Then we move to the others. We won't take time on the others. I believe with the knowledge and idea already, you'll be able to do so much on your own. All right, we are expecting profit right here at 120 pips. So now all you need to do is wait for retest in this kind of situation because it has taken a large portion of our profit. So you just look at the previous high before the breakout. You put your entry there. You set a buy limit. Yeah, buy. So yeah, buy limit is up, then to come down, then shoot you up. Yeah, that's a buy limit. Sorry guys, I'm extremely tired, so pardon me if a bit laggy. So let's just say about 100 pips. This is a very bad risk to reward ratio, but nonetheless, you cannot be profitable 100% all the time. So sometimes it just takes more profit. But now we have to come down a little bit. That is why I see everything is, you have to be, you don't have to make everything parallel line. You have to be able to use your own church mind to just ask yourself, am I doing something right? This risk to reward, is it really making sense? Is it worth taking this trade at all? Or let me see if I can wait for it to come to this point. Is it possible to come to this one and still take me into trade? Let's see what will happen. So just a second, guys. So many notifications on my trade. Here's the card. XPS 500 book support. Here's the card. Just a second, guys. Man, someone is saying something. Should the stop loss be below the previous low or the lowest low in the pattern? No. The previous low, not the lowest low. The previous low. Just below the previous low. Just give you a little breathing room. So let's do 70 pips. Yes, that's still the worst you can do is risk to reward ratio of 1.5, and this is 1.6. But ideally, the best is from 2 upwards. But 1.5 is not bad. So now let's say we want to do this now. We want price to come back here, then go. Oh, we want price to come back here, then go up. We just want it. It's not as if that is what price must do. If it actually comes down, we go in. But if it doesn't come down, whoever must have entered, maybe they went to a smaller time frame to detect early breakouts. See, this breakout, they will have entered on the next candle, or just say, well, I don't care, whatever. Or after this candle here, they will have entered. So that is why it's good to always check smaller time frame when you have set up on bigger time frames. Because someone was asking me the other time that if you have a pattern on a bigger time frame, doesn't mean it will not be valid. It will be valid. It's just the number of candles that you count that matters. So, all right, guys. Zoom is really making my computer lag. Anyway, so let's play. We have two variables. Is either it's going straight into TP, or it comes back and retests, then we go into the trade. But as for me, this kind of trade now, I'd rather go and look for another trade setup. I will not jump into it. I don't jump into trades. Impulsive trading is really bad. Impulsive trading is really bad. So it has actually hit TP1 ideally. This is TP1 hit already. So why do you want to jump in? So then we have TP2 here, we have TP3 here. Let's go. You can see it keeps, you see on that line, it's trying to, is rejecting that region, is really testing it. But it might go up anytime soon. Or come down, retest a little bit. You see, can you see something? TP2 hits, but it's back here. It's back here. So now, if you choose to still enter, because me, I'll see this as a retest, then I'll go in at this point. I can go in at this point, or still wait if it will still come down a little bit. Everything is all about your own discretion. You see? Can you see? Can you see? Can you see? It came down. Now it's going towards stop loss. But I will have entered there anyway because our order will have activated. So it will have activated. It came back to that point, tested it with wicks. You can see it keeps testing that place. It's coming back to entry. Now we'll be in pullback. That is why early detection is very, very important. Someone else that has seen this pattern early, they've taken profit TP1, TP2. You are just entering and you are striving with it. So, ZD, what are you doing? This trade is almost gone. It's a goner like that. That is why you don't force trades. Wait, let it do whatever it wants to do. If it's your trade, you make money from it. If it's not yours, you won't make money from it. Entry is very, very, very important. Okay, good. Now, I know what we are talking about is symmetrical triangles, but patterns are brothers and sisters. Now, looking at this, what do you see? Do you see any pattern or not? It's because we are in an active trade. That is why I'm trying to pay more attention to see if there's another pattern, to see reasons why, because that is why when you're in a trade, you need to be able to, you need to be able to is a bullish flag. Yeah, you are correct, Tumbi. You need to be able to ask yourself that, is the market doing something new? Is this thing still going to go my way, or is going to go against me? Or should I go out now, enter for something else, blah, blah, blah? You'll be able to dictate on time. It doesn't mean it will happen. It just gives you a better leverage. So now we have spotted a bullish flag. Now you need to do is relax. Then your pole is 220 pips. Ask yourself, is it possible? 220 pips right here. Is this possible? You're already in a trade, so it's not as if you just want to jump into a fresh trade. You are just looking for reasons, and you have stop loss. So that's why stop loss is very important. And don't be scared of hitting stop loss. Even the best traders in the world, they hit stop loss multiple times. But as long as you have good risk to reward ratio, you will always remain profitable. So that is that. So let's go. Now we are in this trade and it's pulling back. We are close to stop loss. But do you know what I will have done? This is just bonus, by the way. And please don't really practice this thing until you are sure of what you are doing. We are how many pips away from stop loss? This is our stop loss. We are 10 pips away from stop loss. At this point, when this happened, you know what I would have done? 10 pips away from stop loss. Let's say I was inside this trade with 0.10. The old loss itself would be 70 pips. That's $70. Now I'm seeing minus 60. Just 10 more to go to eat me out of stop loss. What's the difference between $60 and $70? Almost no difference. I believe in my mind, I've zeroed this trade. It's gone. Okay, good. It's gone. I've lost $60 already. I can still lose a little more. Will it hurt me or kill me? Okay, I've lost $60 already. Let's say I lose this trade. I'll be losing $70. $70. I've prepared my mind to lose $70 already. Then why don't I treat this trade now as a new setup entirely? A new setup. A new setup. Okay, fine. It's close to stop loss, 10 pips away. If I use 0.10 to enter this trade, that means if I use stop loss with the new trade, that's $10. If I use 0.20 with the new trade, that's $20. If I use 0.30 with the new trade, that's $30. Okay, 0.30, $30 loss. Can I afford $30 more if I lose it? $100. Yes, I can afford it out of my so X account amount of account size. Okay, fine, I can afford it. It's a good risk. All right, let's look for another long position. Don't forget, bear it in mind that this bullish flag is going here. So see, everything is practical. You need to be proactive when trading. You need to stay on your toes, and alerts help me do that. I don't need to keep monitoring my screen. So let's say 15 pips. I will just give it a little breathing room. 15 pips, yes. Then what's the target? New target will be 265 pips. Guys, I've lost $70 already outrightly. That is why you see, forex is a business of mathematics and calculation. What do I stand to gain? What do I stand to lose? Risk versus reward. All right, fine. Now see this risk to reward. 1 to 16 risk to reward. I'm risking 15 times 20. Let's say we want to use 0.20. I'm risking, okay, $20. I'm risking $20 with 15 pips. Then with 260 pips, let's just say 260 pips, I'm standing the chance of making $520. Guys, will you risk this any day, anytime? $30 to make $520. Do you think he's worth giving it the chance? You've lost $70 already. Losing 30 more will not kill you. That makes it 100. So do you think this is worth it or not? Giving this a chance. Look, considering the fact that price is at support, it has tested this support twice before and has not broken it. And you need to know something about when price is testing an area for the first time, for the second time, and the third time. It might not break it. It might still not break it. And looking at the fact that if you establish a trend line, we still have a trend. And until it is stop loss before it destroys this trend line. You know, I'm not drawing through the weeks. Guys, Notice my trend line properly. I'm not drawing it through the week. I don't want to fake myself in or fake myself out of a trade. See, you can see at this point, week is touching the line. At this point, week is touching. At this point, week is touching the line. So this is a clean trend line. We have 2 touches already. I will regard this as just 1 touch. So we have 2 touches already. This is the 3rd touch on the trend line. So if I'm supposed to take this risk now, is it worth it or not? I need an answer in the chat box, guys. We have 4 people here. I need to know you are following. Is the risk actually worth it or not? Do I have people here? Okay, all right then. So let's see what happens. I'm not saying we are going to win it though. I'm not saying that. Please have it at the back of your mind. Whenever you are trading, what you can control is your loss. And we've been able, with our 2 setup now, we've been able to control our loss at $100 in total. Using the lot size I'm using for the example. The first position at 1 mini lot, which is 0.10. Then the second position at 2 mini lots, which is 0.20. All right, let's go. And we are risking $100. We've considered that $100 gone, as in gone. All right, let's go. You can see it's back at entry. TP1 it again. You know, the first trade now, we still have it. Now we have actually hit TP1. The TP1 we're after already. You see why panicking out of trade when losing is bad. You need to wait it out. When I'm trading and I see that the thing is pulling back and I'm looking at my screen, what I just do is I have stop loss now. Before I went into this trade, I already told myself I can lose this money. So why am I bothering myself? If I'm going to lose it, it's gone. If I'm not losing it, then why am I sitting down and wasting my time? I'll just set alerts. I'll leave my phone or leave my computer and walk away. So I'll go and do something else that will distract me. So now this one TP1 eats. So let's keep going. Let's keep going. TP2 eats. TP3 eats. So both the person that's waited for the pullback and the person that didn't wait for the pullback, we've all hit TP1 to 3. Guys, remember before I drew this thing, I didn't see what the market was doing. I didn't cram the candles. I didn't cram the market movements. We were just following. So we have another 110 pips to the bag. So that makes it 225 pips right now. All right, let's keep going. And don't forget, do not forget, this is our trade with 0.20. This is our trade with 0.20. This one will have moved stop loss to entry or remove the trade totally after hitting TP3. 180 pips times 20, that's $360. And you risked just $30. I had to attend to that, guys. All right, so as I was saying, 360, 180 pips, risking 10 pips. Please, guys, can you see the place of calculation, how it can actually help you maximize profit in the foreign exchange market? Calculation and actually weighing your risk. Weighing your risk will help you. Just a second, guys. Okay. So as I was saying, who noticed something else? While we're actually waiting for our trade, we are doing this, we are doing that, the market still did something else. Another reason, something I would have seen at this point, and I might even have gone in again with another size, another position. With another position. Can you see the head and shoulders? Yes, you are right, Adetumbi. Head and shoulders. While we're in that trade, where we're asking ourselves, will it eat, will it not eat? You know, we have one position here which has ETP1, TP2, TP3, we've concluded. See the second position, just based on trend line and risk to reward, RR. So now we have a third position, the same pair, the same time. So we want to put our entry here for the heads and shoulders. What's happening now? Yes, we want to, okay, hold on. Let me collapse this a little bit. So we want to put this here, entry here, stop loss under the shoulder. This is 65 pips. Then what will be our risk to our reward from the head to the neckline? That's 105 pips. 105 pips. We are risking another 65 pips for 105 pips. So let's say 100 pips. Ooh. So yes, 105 pips. Our risk to reward is another 1 to 1.5. So now we've cleared this 113 pips. We are on this already, is going. Let's keep going. Our eyes and shoulder is now active. We are in the head and shoulders trade. By now, we'll have ETP1 and 2 for the heads and shoulders. We ETP3 for the heads and shoulders. Can you see at this point? Another 104 pips secured with our heads and shoulders. The same currency pair. Progression of the trade. We just keep moving. We are still in one, but we are analyzing the market as we proceed. I keep repeating this thing. At least it's not possible for me to cram what has happened in a pair selected randomly. And this is not that we are looking at the chart and I'm talking about it. We are drawing it, we are playing it. We are drawing it and playing it. Just trying to see the progress of the market. In 4 trades now, you can see we've not lost any. That doesn't mean we can't lose all the 4. But if we lose it, it means something happened. It's fine, it's fine. You're welcome. I'll send you a recording, Bukola. So it means something happened. So you can see we've secured another 104 pips. And our trade that we took based on risk to reward is in 240 pips profit. That's $480 with the lot size we entered with that we risked $30. $480 in a risk of $30. We're doing the space of how long? How long did it take for this trade to actually happen? From here, how many days? 2 days. Within the space of 2 days, we risk of $30. See what we've been able to make. So it's not easy to be patient. Patience is the key though. So let's go on. Let's see what happens. You see price started declining at our 1.618% retracement of the last trade setup. Price started declining. Then the trend is changing. Though market has not made a new lower low, you can see, let it do whatever it wants to do. So by now we're out of the market. We've been able to secure over 500 pips. So let's keep going. Let's just keep going. Let's see what the market is doing. If you go to smaller time frame, we will have seen different trades set up. What do you notice around there, guys? With these candles, you can see that the candles really tried to break that trend line. Price will not just jump, boom, out of nowhere. There must be trials and trials and trials. See, it tested this trend line with 1, 2, 3, 4, 5, 6, 7 candles. That's 14 hours on the 2 hours time frame. 14 hours, it was testing the same trend line. So any action that happens around this trend line now, believe me, it will be a strong one. Can you see that? You have a breakout, but do you see what happened next? A very serious rally down. It might not have done it in one candle. It might take you 2, 3 candles to do it, but after breaking successfully, it will be a very strong move. So, and what do we expect? We expect it to at least get back to the previous low. So let's just keep playing. Let me draw the previous low. So guys, that is it. You can see this line is still being respected. From here, it has been respecting it. Now we have a new resistance up here. You have to be able to transition with your trade. You just keep transitioning. What's it doing now? As of now, reanalyze, reevaluate. So it has broken this trend. But let's see what he wants to do. Can you see the bullish flag breakout? So you keep seeing these patterns repeatedly. If you can spot it early, you'll be making a lot of money from the market, a whole lot of money. You can see the bullish breakout. So, and hopefully this will create another heads and shoulders. I've seen the left shoulder, the head, and now it didn't do that. Instead of that, it just went back all the way up. So sometimes the market will do that. It will just do what it wants, not what you want it to do. That's why you don't force trades. You wait for it to form before you go in for any trade. So you can see that that resistance is still respected. Trend line tested. You can see the same scenario that played out the other time. See this trend line again. 1, 2, 3. It will bring a candle as if it wants to break it. Then you see it will turn back to weeks. So we'll be done in few minutes. We'll be done. You can see breakouts. You can see retest. See retesting that place. So we should not force any trade. When you have reasons to take a trade as a pattern, take it. When you don't have the strong conviction, just leave it. We have a double bottom now. If or when it finish completing, or let me just close this because you might not see the way I'm saying it. We have a double bottom. So let's just keep going. And if the double bottom should break to the upside, we are expecting a bullish move, but it didn't break yet. This now is creating something else entirely. I'm anticipating a rectangle, which can also be, you see, is broken out. So you know, because of the speed, maybe I'll just reduce the speed. See, rectangle, first touch, second touch, third touch, fourth touch, fifth touch, breakout. Simple. Then the profit, what do you expect? The length of the pole, 165 pips. 165 pips. So let's say we just go for 160 pips. As I said earlier on, we don't own the foreign exchange market. We have to be very careful. So then we put our stop loss here. If it hits profit, fine. If it hits stop loss, fine. That is not the end of the world. But by now, I believe our TP2 has actually hit. If we actually calculated TPs, gone back, you know, we'll have taken profit, move stop loss to entry. We'll have closed partial and broken even. So we'll have made money. So that is that, guys. We can keep going on and 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 on this same charts and all. So, and it will still always boil down to the same thing. So that is that for symmetrical triangle. So the application to ascending or descending triangle is the same. Just plot the shape of the triangle, draw it down, wait for a clean breakout at any of the sides. Then you know your profit. Your profit is from your touch 1 to touch 2 of the triangle, and that is your take profit. Your stop loss will be below the previous low or a little bit above the previous high. A little bit above the high. So that is that, guys. It is relatable to symmetrical, ascending and descending triangle, everything I've showed you right now. And as we're actually going through all these patterns, you can see me talk about so many other patterns as we're progressing. Chart pattern is interwoven, and to keep one chart pattern will give birth to another chart pattern, will give birth to another chart pattern. That is why you can keep reevaluating when trading, and you will still be on the safe side, or you know when to cut your loss shots, or when to quickly move in profit, move in this, move in that, break even. What's happening? All right, guys. So hold on just a second. I want to check something. You can see my UCAD trade is still pulling back and is actually going back into my rectangle. I predicted a triple bottom. It failed and broke out as a flag or a rectangle or channel, whatever we choose to call it. So I'll just be hopeful that this will end in profits. And yes, I believe at this point we can call it a day. Do we have questions and answers, or we'll ask our questions later on? So after this class now, as it's still fresh, you can just go back on your Tradingview 2 and look for a pair and start back testing. Look for a pair. See this. This is the bar replay to back test. You click it. Once it pops up, you take the red line, you drop it anywhere. It will erase whatever the market has done. So you'll be able to now start predicting, playing it from that point. And you can go as far back as anytime you want to go and start the bar replay. So you can go as far back as any time, months, or as long as Tradingview will let you go. So that is that, guys. I can go and start backtesting something from June now. If I backtest a strategy from June and I do it till dates, and I can keep a record of how many times the pattern failed or succeeded, then automatically I can know if the pattern will work for me or not. So that is that. Please, where can you do the back replay again? I didn't see it. Okay, all right. So right here at the top menu, in the first class that I discussed the menus, I spoke about it. If you've not seen that video, you need to go and watch the first video in this course. So look at this right here. After the alert, create alert, then you see this bar replay that looks like a rewind button. So that is where you do the bar replay from. So when it pops up, you click where you want to start from, then boom, you're in business. If you want to speed up the replay, this is it, the speed of the replay. if you want to push forward, if you want to go back for real time, if you want to move forward, if you want to play pause, jump to, you are already replaying, but you want to jump back to somewhere else, you just click this again. That's the jump to button. Then close to close it. So any other question? I believe you are good. You're welcome. You're welcome. All right. Bye, guys. Take care of yourself and see you in the next class.